Give me a sense of, you said you're not in a position to call out growth as of now, but give me a sense of how North America is doing as a whole, because on a YOY basis it has fallen. If you can also give us a color on a quarter-to-quarter basis and how North America has done, and in the verticals BFSI in particular, where are you seeing some kind of recovery happening in that segment for BFSI? Samir, 140 bips quarter-to-quarter impact on EBIT margin, 3% down. You said you will inch up over the next quarter, but what is the kind of levers that you have, given the fact that we're seeing the subcontracting cost is also going up in this quarter, and if I'm not wrong, you said that we are going to rely more on a bench to fill up those vacancies. So are we going back to a case where you're going to get back to subcontracting costs ahead? And 11,000 odd fresh trainees. But for the full year, what if there is some guidance on number of trainees or laterals that you look at on a net and or a gross basis?
Yeah. See, first question you asked on North America and BFSI. So BFSI or North America, if you take both, the quarter on quarter, as we said, they have a positive growth. But for that to reflect on year, it takes, because it's a trailing number, right? It takes probably a couple of quarters, or you have to have a superior growth in single quarter to turn positive. So with the kind of growth we have, it's improving, but it needs some more sustained growth on a Q-on-Q basis to become positive on a year basis. Both BFSI and North America are also intertwined because we have a great exposure to BFSI in North America. So as BFSI we start seeing growth, North America will see, the vice versa is also true. From within BFSI, we had a good, reasonable growth compared to Europe this quarter. We don't call out separately, but now BFSI North America grew better than Europe in this quarter. Europe and continental UK, which is a good sign, like it's a recovery on the North America BFSI. Within BFSI, we saw better growth in banking compared to previous quarter, which is again is a good thing. North America, other segments like manufacturing continues to do well, and we had a good growth in energy resources also. So it is having life sciences also have grown. So multiple segments have grown, but as I said, it's too early to call out whether that will be sustained.
So one data point correction in what you said, it's 130 basis points impact, not 140 basis points. And what levers do we have to inch up? I think in the short term, pyramid, productivity and utilization will continue to be levers which we can rely upon. And in the medium to long term, I think pricing and growth acceleration should help us help on margins. Subcontracting part, so as we called out in the previous quarter, I think we should see it staying stable around these levels. It need not be an incremental lever, but that would also depend on how demand plays out going forward.
11,000 trainees have come in. We have already going through a national qualifier test. Actually, concluded the test already, and we have a significant number of people cleared those tests. Interviews are going on. My numbers, like I always every year say 40,000. It will be close to that. I can't tell you exactly what that number would be, but it will be. We're trying to basically bring close to that. But depending on various situations, what happens. But that is what we are, going for.
One question on the TCV part. $8 odd billion that you have said. You said your range is $7 to $9 billion. But if you look at Q on Q from and YOY, how your TCVs have played out, this seems to be a little lower than expected. You said there are some orders which are not getting closed. Are these now, have we seen a trend of orders now getting closed faster, or, is it still the same thing which we have seen in FY24 where, there is a push for these orders to close going forward?
See, there is no specific delay or orders getting closed. This particular quarter, we had some major projects we were expecting to close within Q1 that did not close, that got moved into Q2. It need not be because of decision-making delays. It could be of various other reasons. But beyond that, there is nothing much to read in the overall TCV. As I said, our order book is quite healthy. Pipeline is quite healthy as it was in the previous quarter. Previous quarter, we had $12.4 billion of TCV. We are able to replenish all that. Like, that's the most important thing. Our pipeline has replenished and is more or less at a high all-time peak level. So the TCV itself anyway tends to be lumpy. Sometimes you have a very large mega program that comes and skews the TCV also.